Hey folks, doing a sound check. Let me know you're hearing this all right. We'll get started about 7 minutes or so. We'll let the room fill up. We already have about 83 folks in the first minute, so that's good. Awesome, folks. Be back in just a few minutes. Just waiting for the room to fill up, folks. Just hang in there. Be about another 6 minutes. You need some sound. Just confirm we got a sound and we're ready to go here. Yeah, it's very interesting. You know, I didn't know what we'd be walking into when I was doing the commentary last night. I actually have the Nasdaq futures on, and somebody made a comment, surprised they're not reacting much. It depends on whether you're trading the Nasdaq or the S&P. The S&P is down right now 0.42 on the futures, with the Nasdaq down 2.38 on the futures. So definitely a lot of going on. Maybe some of that rotation. One of the things that I mentioned and thought we might get to fill that gap on the cash S&P at that 3306 number, no chance. We traded right down to the gap again. So basically what this thing is telling us from the technical action on the S&P anyway, is that gap is a solid place, and it's going to be basically looks like it wants to hold, and the markets want to stabilize here. Now whether we re-challenge this again early next week, who knows. We did see some good overall good news come out from the standpoint of the unemployment missed a little bit, but overall it was a pretty good number. I don't see any issues there at all. And last night I put the ultimate trade on the S&P futures, and and I think it was 3305.50 or something. I let it go at 16 on a quick scalp. I'd like to have it back right now. It'd be a lot of fun. Let me go over to the S&P here just so we can get a better look at this. And the overall pattern that's happening here is nothing's changed. The fact that Trump has showed up a positive COVID patient, I guess it doesn't mean he's going to die or what. It's amazing, man. That was just like the perfect storm, right? So all the folks, it's pretty gross to go on Trump's Twitter and just see some of the comments of people, anyway, but the markets are continuing to be solid in this ABC pattern I've been talking about on the channel for days. And I know there's a lot of thumbnail readers out there, and probably the hardest thing that I do every day is coming up with Mason and I are up late at night finishing these videos and trying to figure out what are we going to tag it, what are we going to name it. And so we try to come up with something that's relative to what's going on, or something within the content of the video itself. And it's a difficult thing trying to get that. So because you get a lot of just thumbnail readers that actually don't watch the videos. And I realize it's the internet. I realize it's 2020 and people have the attention span of a gnat. I get it. I'm not any different than anyone else. I like to read headlines, read the clickbait, and make an assumption about what it's saying. And typically, it's pretty much the opposite from that standpoint. So anyway, I'm kind of disappointed we didn't have more action. I'm also wishing we could have been around. I could have been on about an hour and a half ago when this turnaround off of the lows happened, because there was a really good setup there on. We could have walked through a really good trade like we did on Wednesday's live stream on the Nasdaq. So just kind of looking around, trying to find something here that might be interesting to look at. So I'm just trying to look at some comments here, because this is an impromptu session today. I really wanted to just kind of cover, like I said, I thought we could be walking in 2% plus down today, the way markets were acting overnight. And like I said, I started the video, I finished the front end of the video, and basically it's interesting. If I had just left the video alone and not changed anything, not addressed what was going on in the news, it was actually a good video. And so I dumped the footage and started over again. But basically, what I was looking at and what's happening today, and I mentioned some of these factors in the video last night, is that we're still trading down into these support levels, and let me switch over to the cash here real quick. And you folks know I'm still an old school kind of guy. I still like these. I still like the bar charts. The reason why I like bars, especially intraday, is I can see exactly where the market's trading now. Not, I don't want to see the body of a candlestick. So just bringing up this chart here, what we're really looking at on a daily, you can see we went down to the 10-day moving average again, and 10-day moving average is moving up. It's actually turning up and still accelerating. Now, I mentioned this in the video last night that the key was that this PPM3, you'll see it here. You look out over on the left-hand side, you'll see that it's at 0.30, which is a trend level down. Now, it's interesting, we're able to actually, let me bring up the table so you can see it. But that number right now is 33.48, and we're trading above it right now, 33.64. And it's basically, it's defying gravity a little bit right now. But the key is, this is one of those configurations when you're looking at the PPMs, is how it will set up during a corrective phase. So I'll draw in a couple things here. Thanks for the super chats, guys. Michael, Christopher, thank you, man. Appreciate it. Let me draw in a couple things here, because I think that this pattern, regardless of the news, is continues to be really solid. And we've actually had this big ABC down, which I've been talking about for a while, and now we're setting up an ABC up. So a couple of days ago, when you're looking at bars, and when I do the commentary every day, I'm actually walking forward one day at a time on these bars. And I am going this weekend, I'm going to crop out that live trade that I did on the Nasdaq 1 minute chart the other day, because there was a lot of things that happened in that presentation and showing you how these PPMs work, and basically how I piece together the daily analysis, the weekly, monthly. It's the same procedure, whether it's a 1 minute chart or whether it's a longer term chart. But this pattern is still corrective. You can see the underlying channel that's going on here is to the upside, and we're getting up towards some of these Fibonacci levels. 33.98, this is the cash. That was exactly a 50% hit that we did yesterday. We traded right up to that. We got rejected, came off that, ended up closing at 80, closed pretty good. Looked like it wanted to continue to move up toward the grid, and it, in spite of the news, in spite of whatever you want to call it, we are actually pushing up back toward the 40-day moving average, 33.84. We managed to close over that level today. That would be super impressive. And in a few minutes here, I'll talk about some of the other things that are going on, some of the spreads. There's some things going on in interest rates. There's a number of things that we need to kind of go through to try to put this story, or this bump in the road that we hit. And it'll be interesting to see how everything goes. But then the next scenario is still for us to ultimately go to a 0.618 retracement, and that's at 34.42. So the next several days are likely to continue this pattern. The only thing that would reverse that would be a close under the 10-day moving average, which would be 33.17, and that would need to actually happen today. probabilities for that to happen today are probably about 20%. So 8 times out of 10, that won't happen. And it looks like the pattern that I've drawn in here is exactly what we're going to continue to see. And I think that was, hey, John, appreciate. I think when everything was happening last night, I went to CNBC Europe, and I saw that, that Trump had tweeted that he was positive COVID and all this stuff. So you just don't know with the current environment what kind of volatility we're going to get. So this is pretty impressive. We're going to go through the Nasdaq here in a minute and just do some comparisons. Like I said, I'll go through some of the spreads so we can look at the differentials and how the NAS is trading against the S&P and some of these other indexes. And I think that's important to also understand from the standpoint of what the configuration is going. And I've been telling you folks, and I saw a comment that somebody I know is a regular watch viewer and subscriber, that I've been telling you, ultimately for this market to move higher, like higher all-time new highs, is we have to see a rotation. We need to see mid cap, small cap, and even the S&P itself start to outperform the Nasdaq. The leadership needs to change to go to the next level. We already know, and we can see this, and I'm not sure. We'll just see how this session goes, and what we have to talk about. But there's a fair amount of things that I think are at least of interest, especially as we close out this week. But all of the patterns that are unfolding here are within the context of this pattern that I've been talking about, which is this upward ABC. So 2 days, maybe 3 days ago, I thought we had the top of the A, we get a bottom of the B. I think what we've seen is possibly, I'll put a cursor on this over here, but this is possibly where the top of the A is. Now we're getting the 2 bars down, and then we should continue on the upside. And it's going to be all about the close today. Like I said, if we can close, if it's possible to close over 84 today, that would be unbelievable. That would be more than anyone would expect from that standpoint. But right now the high end's 69, and we're just kind of fading into a sideways range. I'm not sure that can happen, but regardless whether it happens today, this pattern still is intact. Nothing's changed with any of this action over the last couple of days. I saw a comment on somebody that read a thumbnail on the channel, went back 2 days ago, and I said upward correction to continue. The fact that it was down, or I said crisis, I used the crisis headline last night. And the point is that we, there is a crisis of a sort, right? Does that mean, but if you watch the video, I was talking about it filling the gap and still, maintaining levels. There was no talk of the collapse of the market or anything like that, because it's not possible. So we'll go ahead and I'll just continue down this road. Let's take a look real quick before I move on out of the S&P, and we start to look at the weekly pattern here. And I think this is even more interesting from the standpoint of what's going on, is that we're moving up toward that 10-week moving average. Right now, the 10-week moving average has a PPM. You'll see over here, my cursor is far right, a 0.41. If you're new to the channel, the PPM stand for price pressure momentum, or the angle of attack. So that is acting as a magnet right now. This 10-period moving average, 33.63, is the key number. I think there's a really good chance we could close above that today, but it's not as important. But that 0.41, and there is an acceleration on the PPM1 over here where my cursor is on the far right. And then the PPM2 is still positive, 0.63 and 0.09. So the 40s basically flat, but it's out of the action. So one of the things that I talked about, I know last week, is that I thought we would be in a trading band between the 40-week moving average and the 10-week moving average. We've actually managed this week to get slightly above the 10-week. 33.9718 is the high that we made this week, which was yesterday, and 3398.12 is exactly a 50% retracement. So we've made a 50% retracement of the decline, and we're continuing to see this pattern unfold that I just showed you on the daily. So let's go to the next level, and let's take a look at some of these spreads, and then I'll go from the spreads to Nasdaq. So this spread here is the Russell, long the Russell, short the Nasdaq. And I've been talking about this for as long as this thing's been going sideways, probably back into May, and really started focus after the July low. Since then, I think we've actually printed a low on this spread, and I continue to believe that this spread will improve over time. And this is what I was talking about a few minutes ago, is that we need to see a positive rotation. This is small cap Russell 2000, and we need to see some leadership happen, and it needs to be consistent. So far, what we've seen is very, very choppy. From a spread viewpoint, I've traded a lot of spreads in my life, and from a spread viewpoint, this is a really good pattern on a spread, looking like this long consolidation is setting up a base for this spread, and we're going to start to see this thing actually move higher and above this pattern, which will tell you that the small caps are going to be outperforming the Nasdaq going forward. And you can see, just looking across this screen, it starts Dow Jones, S&P, I think mid cap, large, mid, small, and then we get into the other indexes here. But you can see everything is flipped today. Everything is turned up, with the exception of Dow Jones. That's the very first one. But everything is flipped, and this pattern is unfolding. I could open up all these screens, but this is going to be absolutely a continuing dialogue here. And I think this is actually the long the S&P. This is on a 1-to-1 ratio. So this would be long the S&P, short the Nasdaq futures, and that's probably the trade to put on, and especially when this thing dips down. But this is a daily graph. When we start to broaden this out a little bit and we go over to a weekly, you'll see this is a big weekly pattern over here on the left. This is setting up a nice zigzag pattern. We're likely to come up quite a bit off of this low, and that's going to be, I think it's going to be a really good trade. When you trade spreads, when you're trading relationships like this, you're not typically going to get, it's not something that moves overnight. This is more like watching paint dry or grass grow, one of those things. And so this is a good solid pattern. I really like this. I still think this is going to be leading the way, and I'm going to bring up something on my other monitor. I will I want to bring up the WaveTech database here real quick, and this is important to understand as well. And I've been talking about this. So let's go spreads. Let's talk about rotation. What's going on short term versus intermediate term, and from the standpoint of our models. Now we model over 16,000 symbols, 16,477 symbols in our database. Somebody said, how could you have that many symbols? Well, it is ETFs, mutual funds, and individual stocks. So there's probably 6,000 and change stocks in here, but it does give an overall feel because the baskets of stocks, the ETFs, all this stuff plays into the same thing. And we're actually in the process of completing a review of the database. We're getting ready to do a big clean job on this thing. So it's an effort. It's a big effort we're doing because it's such a monster database. But the overall patterns that we're seeing there on an intermediate term basis, and this is important to understand, is 60% of the symbols on a weekly or basically on a forward looking, I'll show you a couple things here in a minute, on a forward looking trend mode is telling us that 60% of the market is actually bullish on an intermediate term basis. This thing is not signaling, in my opinion, and based on this database that I've been using for well over 20 years, is not telling us that this thing's rolling over. So not saying there's not short-term trades. We talked about that. Right now we're talking about intermediate, and we're talking about this actually sets up some of the bigger trends and has everything to do with the rotation that we're talking about. So let's go over to the daily database for a second here and bring that together. So we look at the daily, we're only 12% long. There's only little less than 2,000 stocks long on the database on the short term, but this thing was down to 8% the other day. So we've gotten about a 3, almost 4% traction on this. I've been talking about this in my videos every night. If we can get back above 26%, that will be a bullish sign telling us that this rotation is going to continue. Now, it doesn't mean if we get over 26, we're going to go into some new high, new rally. I think it's I don't think anything happens before the election and maybe even after election. We could see this market most likely grind out all the way into Q1 of next year. I don't really see anything from an intermediate basis actually going beyond that. But at the moment, what we're seeing is that the short-term database got completely blown out. So if you've been watching the channel, I cover this every night. I actually predicted that it would blow out if you went back about 6-8 weeks ago, that I was expecting to see the short-term database roll over and then start a rotation, but it went way deeper than we thought it would. So when we got to that September 2nd, September 4th, when we had the big rollover, we had that giant reversal on that Thursday, the database had already started to come in a lot. It wasn't 90%, it was around 60. I thought it would go to 40% level or so. Well, it blew all the way out, as I just mentioned, to 8%. So what does this mean to you if you're watching this? It means that basically all of the short-term models went into a neutral to down mode on a short-term basis. While that was happening, our intermediate database was actually getting more traction. So intermediate trends started to emerge. So I wish I had the ability to zoom in. I'm gonna try something. I did this before, and if you would comment if this is helpful as far as being able to focus on this screen at all. But yeah, that should be helpful. So in the box I put up, this is what I'm talking about here, is we have, of these 16,000 symbols, we actually optimize for the best total net profit on the models themselves. And you see the optimized weekly, which tells us the best model. There's 2 models that we run on the database, and it's telling us that the average holding is 203. Those are trading days. The weekly 1-2 is 168. It has a little shorter holding period. Actually has about 30% more trades. It's much more aggressive. And 3-2 is actually 221 days. And so there's about 220 days in a year. So the average holding on the weekly 3-2 is right now, that is about a year. And so if we start to look at the percent fulfilled, that's going to be down below here. you'll have to kind of look at the blown up screen, but if you look off to the right there, you should be able to see it. But the percent profit fulfilled right now is if we look at the optimized, is 0.26. And what that tells us is 25% of the potential profits that our models do. There's a map for every trade in this platform, and it tells us that 26% of the profits have been yielded. So this tells us that it usually doesn't go to 100, but it'll go around 80%. So there's still 60% of the returns there. Right now, the current average profit is only 7.8%, and the average profit that actually on all the models on the weekly optimize is 29%. So we've got another 15 or 20% potential on average of the entire database on a weekly basis. So you're gonna hear this on Sunday night. We'll see how this thing all pans out, but I don't expect to see much happen. We might even see a slight positive rotation depending on how this market unfolds. And the reason why I go through this depth right now, this is actually about the rotation. It's about the leadership. And, we all know it's anywhere, everywhere you want to go, that the markets have been highly concentrated. And some people will tell you that the market's being driven by 5 stocks, 6 stocks, whatever the number you want to come up with. It's not true. And as I've said before, I close out this box here. Right now, this is the short term. If we go back to the weekly models quickly, if we go back to those weekly models, there's 9,932 stocks that I just discussed that are in that trend mode, and we're 60% of the database. So it's pretty obvious to me anyway that there's a lot to go on the upside. So okay, so I just wanted that's a lot to talk about, but I'm trying to tie together why this rotation is important and why it's happening, and it has everything to do with what's going here in the intermediate database. And I know you folks aren't used to seeing this type of analysis because there might be someone else out there that has a database, but very few people are actually tracking the 16,477 symbols. And you have to understand that I built these models. I was the architect of everything. And so therefore, I've got eyeballs on 16,477 items in the database that think like I do because I told it how to think. Okay. So to me, it's very significant. I've read this database. We've used it in the institutional world for well over 22 years. And it's my DNA and what I bring. So everything that I'm bringing to the channel and what I'm doing here is really data driven. So if you're new and haven't heard this stuff, if you've heard it before or you're a WaveTech user, you can actually subscribe to this. You can go to Kendall Report kendallreport.com/wavetech. You can get there. And then we also have the market grid, which I show all the time. We just started offering that. And those of you that are on there, I see some names that I know have requested symbols. We're doing a review this weekend for expanding the output of the market grid. So we review the symbols, just trying to see the viability of them based on a broad, not necessarily a broad appeal, but having enough volume and some other attributes we look at anytime somebody gives us a symbol request from a user base. So anyway, that review is being done. Yeah, Josh, that's interesting. Stephen Kalajian at Ticker Talker is a very good friend of mine. I haven't I've been so busy with things that we've got going because we're about to release some more software. I've just been absolutely swamped, so I need to hook up with those folks. That's funny. Okay. So yeah, let's get into talking about some of the things. Let's go back to the charts. I want to go through I want to finish this whole leadership, this thing that I've been talking about for a while. And let's go back to let's go back and let's talk about the Nasdaq, because that's the final component of all this. And I think that this will be, and we'll use the Nasdaq futures as far as that goes, just to take a look at this. Now it's interesting that in spite of this 2.3% drop, we're still above the 10-week moving average on the NAS futures. So this is actually encouraging. It feels like the end. My guess is, and we'll go through. We're what, 2 hours out from the close. I don't know if we'll go that long. I'm sure you guys would be willing to hang out for that long. We'll just see how it goes. I've got, like I said, the reason why I want to do a live stream today is just to be able to cover what's going on as far as, if there was some kind of disaster going. But you could actually argue in the NASDAQ here that that's exactly what's happening. There is a pretty big disaster. But then when you start to look at it, there's a number of things that we can look at, and I'm going to just pull this over just for a minute. And like I said, we're trading right at that number. I'm going to try to blow this up again. Yeah, I think that, does that work for you guys when I do this, to zero in on that chart a little bit? Yeah, somebody says take out March to June and then reanalyze. No point. That's March to June is part of the market. You need to keep it in. Anyway, so but you know what, somebody asked, and I will cover this. I think it's good. Okay, good. Somebody asked a question about the regional banks. I'll tell you where, if there was the biggest short in the world, if anyone out there can figure out how to short these credit unions are the worst. If you have money in a credit union, get it out of there. These guys are maniacs. They don't know how to run anything, especially on the mortgage area. They take so much risk on mortgages. It's crazy. Those of you may not know some about my past, but I was big in mortgage pipeline hedging back in my institutional days, and helped run some very large books of business on mortgages. And these guys are amateurs, so they could turn that thing upside down so fast. If there was a way to short those credit unions, man, that would be the ultimate. That'd be the ultimate short. Yeah, you can, but the regional banks aren't the same as these crud banks. It's like, anyway, I won't go too deep in that. But I've been talking with a buddy of mine who's a derivative guy that, we were talking about just being able to figure out how to build some index that would mimic those darn things, or some way to wrap them and find a way to do some default swaps or something. But there's nothing out there. It's really sad that there's that big a financial area, that these guys are private for a reason. I've talked to a lot of my investment advisors and people that we worked with for a lot of years, and they talk about these non-traded REITs. I always tell them they're not traded for a reason. And they don't want you to see what's going on behind the scene. It's like the Wizard of Oz, right? Don't pay attention to the man behind the curtain. So that's a lot of what's going on with all the credit unions, and maybe regional banks. We'll see. But yeah, the question is, have we created created. Let me finish on the Nasdaq, and then we'll go back. But this thing here, like I said, you can see how on the red line is the 10-week moving average. It's upsloped. We traded below it for 2 weeks, and now it's accelerating. Yeah, you can see off on the side, the chart outside of the window that's blowing up here. You can see off that the PPM1 is actually turned up pretty substantially, and that's actually showing an acceleration. Let me see if I can move this over. Yeah, this would be a little better. Yeah, so just to give you an idea, that PPM1 right now is on which tracks the 10-week moving average is a plus 0.79, 0.97 and 0.67 on PPM 1, 2, and 3. The Nasdaq's still in a big uptrend. This thing is not rolled over, and this is part of a larger correction phase. And thanks, man, for the the crystal baller. That's pretty funny. So yeah, I always have to bring up my crystal ball. People love this thing. That's pretty funny. Anyway, but yeah, this pattern is still bullish. We're still in an uptrend. Market hasn't rolled over. The end of the world is not happening, although it feels like it from day to day, right? But it's not. And from a technical standpoint, this is what's going on. And even from a fundamental standpoint, I mean, there's a lot of trolls. Nobody wants to believe that this, that the economy is actually coming back as well as it is. Well, we continue to see these underlying metrics that there is a gradual improvement. And I think New York just opened up some restaurants 25% or something ridiculous. Whatever it is, like I've said before, they get California fully back online. You get some of the larger population areas on the East Coast fully back, and you get another uptick. And all of a sudden, unemployment levels are down well below 6%. And they will, thanks Super for that, appreciate it. They will do a stimulus right after the elections. And man, this is not a political statement, but if Biden wins, they will throw so much money at this place, it will be absolutely insane. Especially if the House and the Senate, if it's all one big partisan pool, you will see things that you've never seen before. And I suspect, from a market viewpoint, it would be good. I don't have a negative thing on that, because they're going to just throw money at this thing. And I've talked about this before. A little segue here is that the Fed, and this week I think 5 or 6 mentions from different Fed presidents have said this, and they keep saying it. I keep saying it, is that Powell and all of his minions, everybody, it keeps telling you that they need the fiscal stimulus to go along with the monetary. Monetary only will do so much for the economy. They need that stimulus, and if they get another $1,200 checks going out and all that stuff, that's just going to juice the economy again and help it to come back. That will even help at least financially come back from the economy, even without people actually getting back to work. So it's I think I had a video, I think in March, maybe early March, when all this was really full on, is the unintended consequences of what we just went through with shutting the economy down. It is socialism and possibly universal income. And some things, I've said this, is that I don't think, thanks Gino, appreciate it. I don't think that some of these programs are ever going to go away. And partially because, and hospitality, by the way, if you look at the report that came out today, hospitality and some of these areas that we'll say COVID ground zero stuff actually came back pretty well. And so that was one of the areas of employment that really started to work pretty well. But anyway, so you can see patterns on back. Now I'm back. Sorry for the segue. But as you look at the Nasdaq, all of these trends are still up, especially at an intermediate basis. That's why I just went through a few minutes ago, going through the intermediate database, looking at the spreads, the Nasdaq versus the S&P and all of the indexes against the Nasdaq is probably a good trade. Now, I think the Russell versus the Nasdaq is probably the best trade. That has the most potential, possibly mid cap, but I think Russell is definitely that is definitely probably the big spread to play, and those spread trades can be amazing, and you'll have that spread on for a while, an absolute while. Okay, that spread could be on this time next year and still working. So trading spreads is like maybe like long-term leaps and options, right? You got a much bigger picture, and it gives you the ability to hang on to some of these trades big. So and it's probably can do this pretty good, especially if you have a custodian, a broker that allows you to do fractional shares. You can probably put some of this thing on and just let it play out. Because it looks to me, like I said, as I went through a little bit ago, so if you missed that on a replay, walk it back. We always go through the timeline and try to put what time things are on. So I know folks are tracking that. So yeah, let's. I think that's everything I can say on the indexes. We'll go back. Let's move on just a little bit, and let's go over to gold real quick. The gold's down a little bit, 1907. This thing's still not ready to roll. This is the weekly chart that I've got up here, and it's still not ready to make a breakout of any sort. It's not ready to move up. If you can see this pattern on the market grid here, and even the Fibonacci, we're right now at a 20 on a weekly basis, going from the spike high that we saw 10 weeks ago to the lows that we've just seen literally this week. Is you can we're just now coming up to a point 236 retracement. If we get to 382, that's 1942. I mentioned that number in the last night's video. So that's we'll move up, and you can see the market grid is right at that same level. Let's put this up so you can see these numbers a little better. This would be a little bigger. But you can see the purple line, the top of the market grid there, is exactly 0.382. And that's 1942. That's the top end of the grid. This grid is not going to change much. It looks like from a volatility standpoint, just guessing at this thing, it may contract just a little bit, meaning it'll be a little smaller. I cover this on Sunday night, on the video on Sunday night. So we're coming, and and I tell you, I know I see a comment here, wave 2 lockdown coming. Maybe it is. I got a good chance. I'm pretty much would not want to make that bet. I wouldn't go short this market thinking that's going to happen. You'll have plenty of time to figure it out, and that's the point of what we're talking about here. Right now, like I said, there's at least 60% going forward of that 220-day holding period. So we're looking at another 4 to 6 months minimum on these intermediate trades, and they can recycle and regenerate themselves. We've seen a positive cycle on our database last up to 2.5 years and almost 3 years, and one cycle that we watched. So these things kind of refresh. They'll stay above, they'll get up to 60, 80, 70% bullish. They'll pull back to 42. There's a rotation. It refreshes. New stocks come into leadership. So that's when I talk about rotation. It's about leadership changes and rotation. Like I said, I'm watching 16,400 symbols. so I can see that rotation and the cash flows in the markets. But yeah, so this on gold, this is going to be your range here for the most part is going to be between the grid. This is a weekly grid, so let's go over to a daily. So daily we got up to the 21 period moving average. Let me bring up this so you can see this 1902. We're 1907 right now, so the 21s 1925 were just below that. So we did trade right up to it at 1923.60, and that also goes in line. I forgot to bring that up, but the weekly chart S2 for this week was 1922, so we went right to the S2 level. And if you recall, I was talking last week, we probably should bring up the dollar here while we're talking about gold. But last week we got an RXT sell, which is a market grid sell. Yeah, it was a market grid sell. When we close above the market grid, it signals 1 to 2 weeks of sideways movement, 1 to 2 days if it happens on a daily. So we got that sell signal on the dollar. I suggested we'd rally back to around 1900, just a little bit above it. We did that this week, and I don't think, based on what we're seeing here, you got PPM1 still down minus 0.21. The other PPMs are basically flat. So we're in that basically consolidation. Yeah, I'm from looking at the, I'm going to flop back to the weekly here. Yeah, the extreme on the weekly this week was 1792. Next week, I think we're going to hold this 21 period moving average. It's got an upslope of 0.39, 0.47. That would be extreme 1774. If you saw that number, that would be, that'd be the buy. That would be a huge buy. I think you stay in this consolidation range. You could trade down into maybe back to S1, S2, and we'll see how this thing. I'll cover this on Sunday night as well, so we'll definitely be looking at that. Yeah, a lot of companies are retrenching. Remember, we're stock investors, right? So let's say all these companies lay off a bunch of people. What does that mean? The companies are probably, that's one of the old things that I watched for 30, 40 years, right? When layoffs come, those are positives for the stock market. And in this case, yeah, I'm not sure what's going to happen as far as the configuration here, but you have to still realize that the economy is probably only maybe 50, 60% turned on. So if you turn it on 100%, then some of those things stop to happen. That doesn't look like it's going to happen. I read a really interesting article about some of the folks that have offered their bodies as test tubes to these COVID vaccines, and pretty interesting. I didn't say anything scary, but it was some interesting. So check out some of that. Now, I don't think I haven't been bearish. We're looking at an upward ABC pattern that's unfolding here. But when you look at the Nasdaq, as I just mentioned, if you missed that part, then you really have to go back and watch the rebroadcast. But gold, these are basically intermediate, longer term uptrends. Let's just move it all the way over and let's go to a secular chart. And this is brings a much broader picture. This is the 10-month moving average is up 1.86. It's well below that number, but this actually is worth bringing up because I mentioned that if we did get down to 1800, that would be a screaming buy. Well, the 10-month moving average, which would be somewhat similar to the 40-week, which is where that number came from, is 1799, and the ppm is at a 1.86. That tells you there's less than a 10% probability that gold can close below 1800. So what do you do when you have a 9? If you had a, that's like I guess betting on a horse that's you know got these for sure betting ratios. You're just going to have there's just nine times out of 10 it's going to hold this number. So if we did get down there, that would be huge. The other thing to realize, it's going up almost 2% per week. So that is about 40. So that number is going to be closer to 1830 to 1840 next month. I realize we just started October, but that number is going to come in play, and you're going to see these numbers play out in the market grid on a weekly basis. Yeah. I'm just looking at some of the chat here. It's a very, very dangerous process, I guess, because I've been a technician and a quant for so many years, to actually look at and say, if this happens, then that will happen. Oftentimes, and I talked about this, I think, on the live stream the other day that I did Wednesday, that you need to actually, those of you making those comments, it's fine. If you have to look, you should write this down, that today I said this, and then after election, look and see if what you said actually worked. And it doesn't matter if it's right or wrong, there's something to be gained from this. And I mentioned this the other day. I'm just going to go into this for a second here. I sometimes get into the into a teaching mode, but this is important. Many years ago, if you folks have read Market Wizard books, a friend of mine, we went out to Ed Sekoda's house and we worked on this thing that I'm about to tell you. So let's say you think gold and currency will crash after the election. Okay. Okay. So write that down, write down the date, go to election, see if that comes true. Let's say it doesn't. Let's say the opposite happens. Maybe it goes up. I'm not saying you could be completely right, okay? But what you want to do when you have these kind of thoughts is actually mark them down and then start to track to see how your ideas translate into the markets. So let's say you find out that every time you make a comment like that, you're wrong. Well, you just found the best trading signal that you could have ever found in your life. And so, and the other thing might happen is that I say these things, but I don't act on them. So, but I'm almost always right. Okay. So those are things that you can track, and you should actually keep a diary or a log of these events. I used to do this many years ago after the meeting that we had with, many years ago, I guess it was like must have been 1986 or so that this meeting happened in Lake Tahoe. But the point of it is finding out whether you're wrong or right, and whether those are feelings that come out. Those are hunches, and they're good things, but they need to be evaluated. So evaluate those things. That's like a huge thing. If you can figure that out, or you got a buddy or somebody you know, or maybe you want to fade me, that's okay. And so every time he says this, the market goes the other way. That's fine. I don't care. Those are really good things, but you need to actually build a track record around those things. And I was Just a quick little segue story. I was a head analyst at a regional firm. We had about 5,000 reps, and I was head of the financial research. And one of the, we'll just say, major players in the firm used to take the analysts and he would fade them. Basically, what the customers were hearing and what the brokers were being told by us in that research, he would fade him. Well, I came in, he started fading me, and I was killing him because I was right more than I was wrong. And finally, I heard the story behind the scenes that he cut back, only do about 20% what we normally do when Kendall says something. But those are the kind of things he learned from that. The point is not that I was right or wrong, is that he learned from those events, and that's really important. Yeah, that's funny. That's really funny, and that's exactly why the FANG stocks were up. But the point is really it's more about your own instincts and doing that. So there's something there. I learned a lot from that session that we did way back when, and it was more of a self-awareness thing. And there's so many people trading now, and and watching channels like this and watching me, that you have to ultimately dig in there and kind of get that, bring that stuff into yourself. Yeah. So so I see something else. I gotta go here for a second. I'm in that story mode. He spent $1 billion in these calls yesterday. So um, I have 3 factors in people I met. Yeah, I guess we'll just I'll change the names to protect the guilty. How's that sound? So there were 3 guys I met. One guy, everything he said, we'll just his name was Richard. Everything he said you could divide by 10. So if he bought $1 billion, he bought 100 million, which would have been a lot. But the point is, it was always divide by 10. The other guy was Jack. Jack you could divide by 2, and it was still a decent position, but he was always blowing it up. And the last guy was Art, and everything Art said was bullshit. You could just know that he didn't do anything that he said he did, and it was just all BS. So I always go, I always do the 3 factors. So which one is it? Everybody tends to embellish and all that stuff anyway. But yeah, so anyways, old stories from the past. Okay, but yeah, gold long term, you saw 1800, 1840. That would be a big number. As I said, I don't think around 1920, where we saw the highs this week, maybe a print to 1940. That's going to be the higher end of the range for gold. It's just not going to go above that right now. There's no reemergence bull market, no acceleration. None of that stuff is likely to happen from this, especially on a longer term basis. We're actually having, from last month's bar, we had a big range, right? So the range last month was 2001 to 1850, and now we're likely, and this is a classic, when you get that big range, you'll get an inside bar. And so the inside bar would suggest on a monthly basis that we would see possibly an S1, which would be 1849. So it'd be down to that 1840, maybe 1820. It's not exact numbers. And on the upside, R1, 1941, and that would be perfect for an inside bar. And especially pre-election, these markets could quiet down here. It could be just the opposite, where nobody wants volatility, daily volatility ranges, everything contract over the next several weeks. And of course, that's exactly what probably should happen here prior to a big election. And now that everybody's going to be watching the daily health reports on Trump, right? And I'm sure there'll be memes out there with Trump on a ventilator or something. Who knows what will come out of there, right? Hey, you're welcome. Have a great weekend. Yeah, well, I don't know. Will it fill the gap today? Let's go back over. Let's take a look at what's going on here. Let's go over to level 2. We're down at 51 right now. The high-low range on the futures was down at 3,300 even. High 75. Let's go over to the cash. It's interesting, this chart came up. This is the monthly S&P, and this is I actually glad I brought this up somewhat by accident. So if we look at the market grid here, and I remember when this thing was really wide, this was the angle I thought it would come up to, but because of this big move up, here's what we're setting up here. And we're looking at last month's bar. Let me bring up that data. Yeah, this is actually really good. This happened. So last month's bar was 35.88 to 32.09. You know, that type of move used to take about a year and a half, right? We're talking just weeks. And so now we're going to see an inside bar for the month of October, which goes in with what I talked about gold, what I've been talking about on everything. We're in a giant consolidation pattern, this high level consolidation. And it doesn't appear to me that this thing's just gonna roll over. I've been very frustrated, and every time I do a live stream, it's not letting me get back on data on the INX. I don't know if TradeStation has an issue or not. I don't know. But let's look at the market grid that's on the screen below. The S1 3301, which by the way, this is the cash. If it printed there, would fill the gap. The R1 is 3424. And if you think about what analysis that I put on the channel last couple of days, what we talked about a half hour ago is that the range of expectation is a 0.618 retracement on the upward ABC on a short-term basis, and that number is 3442 would be the extreme. So here we are looking at R1 3424, S1 3301, and that would also represent an inside bar after a monster range and reversal. And this is something else. I'll go back to Monday's video and last Friday's video. Is the key to this market is that last month when we had that range, we needed to close under 3328 to signal an outside reversal. Well, we closed up at 3363, and that negated it. And as I told you at the end of the month, is that this sets the tone for a multi-month consolidation range. So we're looking at a trading market. So it's going to be fairly easy within this range I just put out here. This S1, I got to go to the right bar. This is the current bar. The S1 is 3301 to 30, we'll call it R1, 3424. Those are going to be most likely the trading range we're going to see here for a little bit. And we're likely to see a huge contraction of the volatility this month, most likely just because of the, we'll call it pre-election jitters, watching, maybe people don't care about Trump's health. I'm telling you, you get a real picture of him on a ventilator, you might be surprised. what might happen. But listen, I remember when, I'm old enough to remember real time when Ronald Reagan got shot that day, and the markets hiccuped and they just went back to doing what they're doing. So you're right, probably the markets don't really care. And but what I'm setting up here is a broader sense, is like if we went to the next levels, let's say we go S2, R2 on a monthly basis. So we see this thing expand out a little bit further. So what is that? That's 32.30. That seems a little extreme, but it's certainly within the realms of happening, because we did print. If we look at last month's low just real quick, we saw 32.09, and that would 32.30 would be a retest of that, certainly a possibility. And then if we look at R2, 34.94 all the way back to 3,500. So now, well, I think we're going to stay R1 most likely, and I'll try to remember to update as we go through the month. Now that I've said this, is I think we'll stay between S1, R1, 33.01, 34.24. A little extreme here because we're looking at 0.618 retracement is 34.42 on the S&P. So that is going to be your range. If it did go one more level, then you could see 32.31. We could end up with an R1 S2, or we could see an S1 R2. So, and I'll update this as we go through the month. Right now, the weeklies, let's go to the weekly chart and just take a look at this. I know we did some analysis earlier, but yeah, so the weekly chart is setting up that right now this is actually very interesting, that the 21 week moving average 32.19, which would correspond with S2 on the monthly. So that's certainly within expectations, but with the upslope that we have on ppm 1 and 2, 0.43, 0.64, that tells us that we're going to stay most likely in that range with an upward slope. And even though like last week on the S&P we closed at 32.98, we're 32.60, so we're definitely going to see an uptick, a close. And I mentioned this earlier, if we close above the 10-week moving average 33.64, that's highly likely that's going to happen today. What time are we getting? That's an hour and 20 minutes to go before we'll see all this stuff. So let's see, I did write down something that somebody mentioned earlier, and I think is worth going into. Yeah, wow. Regional banks. This is a regional bank index. Well, there's certainly no short here, and I doubt if there's a long. This is like looking at the airline stocks maybe. Let me go to daily. Wow. I'm actually gonna bring this up in on a short term on the WaveTech platform. Yeah, so if we look at this even on WaveTech, it tried to buy it here. It did go up and it's flat, so we don't even have a position here on a short term. But if you're a subscriber, this would be a trade if you think this regional banks. Listen, these regional banks are going to have maybe a probability of doing a little better than the major banks, but I mean this is a dead sector with the Fed, printing money like they are, keeping interest rates at zero forever. We thought we had finally gotten out of that, but that hasn't happened. Yeah, I don't use yeah. Not that I don't care about MACD or RSI. MACD is actually at least not a 0 to 100 meter. Just don't like RSI. RSI. I threw that out of my arsenal about 1982 or 3, so a long time ago. Yeah, I don't only look at the price action moving averages, but we look at percent changes. Yeah, I guess that is what I'm doing. But it, you know, there's no reason to look at, like I've said to you before on this channel, if you figure out something has worked, you get lucky to figure out 2 or 3 things that works and you wait for them, that will get you there. That's what this platform does. It's programmed with my thought process in there. And when this thing goes, this particular symbol has got we have a rating system, every symbol that has a terrible rating. I'm bringing some up on the other screen, but I'll bring this up a little bit. No, I haven't covered Tesla. I'll do that. I'm just going to bring up our other platform here, and I'm going to bring in something here that I think will be interesting, hopefully. This is the Portfolio Expert platform. I'm just going to put that same symbol in, and we can drill in a little bit better with this one. Yeah, so it's interesting. Now this has got a terrible rating, but it did actually get a buy signal down here on a weekly basis, but it looks like it's failing currently. It's not really operating real well. But yeah, so it sold out right here on February 7th. It got out. This is the first time it's ventured back in, but this overall has a very poor rating. So that's one of the things about our platform, is that you can actually see what type of accuracy it has. So this particular isn't. This is the daily. Oh, the weekly. I'm sorry. If we go over and look at daily, then we can see that. I'll bring that up here. Yeah, it actually was long. It exited over here. It has no position, as I mentioned. So, but it did sell it sold on 1/2/20, and as I've told you folks, if we came into January of 2020, we were selling with both hands. Starting mid-January into early February, we were already 40 to 60% in cash when the markets rolled over. So, and I wasn't doing the daily videos like I do now on the YouTube channel. I was doing writing commentary behind the firewall, but folks were asking me why were we selling so much in January and February, and there was just a negative rotation already starting underlying. I don't know why that happened, but the technicals oftentimes will but yeah. So anyway, yeah. So and that's the other thing you see here. Everything I do on this channel is all proprietary stuff. You know. Yeah, let's see here, Ray. I'm just looking at your comment you just put up. Yeah, yeah, I can actually. I don't know what 5 you have, but I will show you something here. And actually, this platform is for managing money. This is an institutional platform that we have, but I'm going to show you this this returns that I'm putting on the screen here. Let me just go year to date. Let's overlay a S&P up here. This chart here, this is 5 ETFs here. You said you have 5. This is EEM, the emerging markets, EFA, IJR, the small cap, mid cap, MDY, and SPY. And this thing is up 22.92%. It was up a little bit better. Let me make sure I get year to date here. There we go. Year to date 22. So it was up a little bit more a few weeks ago, but yeah, you can definitely get a lot of impact with using ETFs. In fact, on our institutional platform, that's where a lot of people run a lot of money on the ETFs. And this is actually, it's a WTMV. This is a WaveTech multivariant model. So we have pre-built strategies that you can use as well. And you know, one of my favorites to show when you get in, we talk often about this. We talk about being able to do multivariant trading, building your own ETFs, all that kind of stuff is really important to get to. And you can go to you can actually go to our website here, and let me just bring you over there just for fun. You can learn a lot about our platform here, whether you're a professional or individual. We do have different levels, but yeah, you can go here to Portfolio Expert. That's expert with no E, and you can peruse here. You can see the support. You can watch videos and see what we're teaching, and there's a bunch of information on the website as far as what we do. But one of the things that we talk a lot about is this direct dynamic indexing. And what we're doing here is actually giving you the ability which to trade on a short-term basis, a long-term, an intermediate, all within the same portfolio, and everything 100% automated. And you can't even think of doing this. Even on 5 symbols would be impossible. This portfolio that I put up here right now is a clean energy. We repackaged some ETFs. We took the ETFs, we researched based on our system what models worked the best. We took the best of breed, we put it in here. This portfolio is up 82% this year. It has 27 symbols in here. It has 27 signals, but there's each one of these are in 3 times. So you can divide that by 3. There's only about 9 stocks actually in this strategy, but it's trading it on a multi-level basis. And there's so many moving parts that you can do. It's just unbelievable. So these are all the trades, everything that's coming up. And matter of fact, that's 82% returns with a I think it's 1.2 or 1.5% management fee coming out. So anyway. Yeah, it'll be interesting to see how we trade coming in to the close. What time we got here? We got 1 hour and 10 minutes. Let's do some individual stocks because I didn't get the chance to do that. Markets are actually really stable. I just don't. This is daily ES. We're trading back down to the backside of that 21 period moving average. Doesn't really look that negative to me, but we'll see how it goes. But let's go ahead and do a few stocks, okay? Hey, Christoph, if why don't you put out some of those symbols that 300% return on gold mining stocks since April? I'd like to know that. Okay. Yeah, boy. Yeah, Mr. Tater, that's on the pro version only, and I'm working on getting that so it can be released differently. Yeah, let's do a couple of these because we didn't get a chance to do a lot of this on Wednesday. Yeah, we somebody mentioned Fiverr. We do a lot on Fiverr, by the way. Um, we hire a lot of people there. I'm just taking down some of these symbols. Yeah, I think Josh, I owe you from the other day on that JKS. I'm going to start with that. Yeah, if you guys aren't on our Facebook, you should go to our Facebook. It's Facebook group. We have to approve you to get in, but it's pretty simple to get in. We do have some community rules, so you know, and some folks seem to be unhappy with our community rules. Um, the world's changed a lot. When I grew up, there used to be a sign on doors of stores: "No shirt, no shoes, no service." So you got to comply. Nothing big. Just don't want spamming on our Facebook for folks to talk about markets and relative stuff that we're doing with the Kendall report and our software and all that kind of stuff. So it's a good place. Somebody put a meme together with me with the Thug's Life with the glasses with the with the joint. It was pretty funny because I said the other day that if that dividend stocks are for sissies, and what I meant, I need to talk a little bit more about that. I think it's kind of interesting because a lot of folks think they can hang around. I'm getting paid while I'm holding these stocks, and a lot of times those stocks are the most risky stocks. Somebody mentioned a stock I think on the Facebook, and it's got a 4.5% yield. It looks like the company's been around for a couple of years. They're buying, maybe they're just buying folks to get in there. I don't know how they're, I don't know much about the company. It might be a great idea, but if you'd have done it in the beginning when they came out thinking that was a good idea, you'd be down about 35-40%. And if you held the stock for 10 years, you'd break even. But if you buy it now, it might be a good trade going forward. So we'll see. I don't remember the symbol at all. So okay, so yeah, a couple things here. I'm going to bring up. Let's do that. I'm going to go back to Portfolio Expert site here, and I'm going to go to my account. And if you subscribe, you get also the market grid. So let's start. I'm going to, before I do this, hang on. I promised I would do this symbol first. So I'm doing JKS. Oops, is that a good symbol? Oh, I see what happened. Yeah, wow, rocket ship, right? Up another 447. Solar. So yeah, let's put some Fibonacci stuff on here, see what we can find. Nothing active there. This thing's running big time. PPM's off the map. 5.92. Pretty much all you can see from here. We've actually, if I bring up the market grid over here, you'll be able to see that the high-end market grid was, the high's been 44.98. This is daily 44.22, 45.01. So basically went to R3 today. It was very close yesterday to, let's see what it did. Yeah, it's interesting. We did get a close above RTX, and in some of these stocks, just on this, we closed above the RTX number, which typically gives a 2 to 3 day sideways to down, and this thing is still continuing to surge up. And obviously, there's some news going on. Josh, I don't know if you know what's going on, if you want to put something on the timeline, but obviously there's some stuff going on with this thing for sure. We've had a couple of these closes above the RXT on this run, and we got maybe 1 day sideways and turn around. Same thing here. We got one and then reverse. So yeah, this thing's in a runaway. So there's probably, yeah, makes sense. Short squeeze, sure. Yeah, but anyway, yeah, as far as making analysis, pretty much stuck with the grid. We can go over to the weekly. Maybe there's something there. Yeah, weekly is really crazy. Yeah, so maybe this is the squeeze job. You got a double close over RXT. Maybe we'll come back into the pattern. So yeah, maybe while everybody's getting squeezed, maybe you take the other side of that. So all right, let's go ahead and let's go back to, we'll start with Tesla here. We'll take a look with the candlesticks on. This is weekly. The range on the for the grid for this week has actually been very narrow. We've had a high of 448, which was R2. S1 is 386, never came close to it. Basically just continued. We got ppm 1, 2, and 3. They're in the 3 and 4 percentile ranges on a weekly basis, and that would tell you that the 382 level, that is going up almost 4% a week. So we're looking at that being around 390 as we come into Monday. So if we did move back into 390 range, that's going to be your buy point. If we go into a daily chart here, this is interesting because we are getting, this is something I talk a lot about on the channel here. As you get this contracting, you get the contracting ppms, or not ppms, contracting market grid, which usually signals the possibility of a slight downward fall. But there are some current Fibonacci objectives to the upside right now, which are high targets right now, 483, 533, 464. Maybe the minimum is 483 is possible here. I think that plays into some of the grid on a weekly basis, but we're still in, intermediate is still in a huge uptrend. Yeah, I'm just taking a glance at the S&P cash. It continues to hang right around this 3360 level. And like I said, 64 is going to be the key. We're an hour to go, so this could get interesting. Maybe we'll go off into some other stuff. Let's do let's look at Apple. The other thing I want to do is I want to go over to the market grid on Portfolio Expert. And this list is going to expand probably by 50 or 60 stocks coming into Monday. We got a lot of suggestions. I have to do some research. We have some international indexes coming in. But let's go down and take a look at what Apple's telling us here. Here's Apple. I'll show you here, but this is on there so for your use for trading. So the grid is the daily, and then we have the matrix, which is exactly it tells you what type of things going on. We actually are working on, right as we speak, we're working on a process which we can go in and search these stocks. You won't even have to scroll down. You'll be able to up at the top put in a thing that find the stock. We've got a bunch of evolution of this. This is going to become more of a freestanding product as we go forward. And I don't know how many symbols that get in there. We have to be careful getting it too big at the moment until we get the search done. And once that's done, then we can actually expand the numbers out. It'll be easier to find the symbols. So, okay, let's go over and take a look, go back over and take a look at Apple. We've got the daily, same thing that Tesla's doing. This is interesting though. We got PPMs at a plus 0.62. We've got a mixed picture, but the key will be here. You know, we're down 271 on Apple. We'd have to close back above this 113. Let me just look here. Yeah, it's got a hold 113.45 or 113.65 here, but the 116 would be the place you'd have to be, which that's not happening today. But this upward formation here is giving current targets of 151, 170 up here. I think that's a little far-fetched. A lot of times we'll see these type of projections come out and they never get met. And let's go ahead and take a look at the weekly. Weekly, very similar. We've talked about in some of these other markets. The 10-week moving average right now is 114.72. It would be that slope of that 10 is actually, the market's going to stay on either side of this. If we look at the grid that has happened this week, it's really been a narrow range. We're looking at 112 to 117, and S1 was 109, never got there. 117.78 was R2, 117.72 was the actual high. So we basically printed into that. Okay. Here's Amazon weekly. And Amazon, once again, these very narrow ranges for a lot of these stocks this week. Look at the range 24, 33, 24. $31.17, S1 30, 31, so basically just below, I'm sorry, not even close to S1, and right to R2 32.30, the high 32.24, last trade 31.30. All these FANG stocks are down pretty good today. But that 10-period moving average is the magnet. And so far we've been trading between, if we look back on 2 weeks ago, the range was 29.05 to 47. If we look at the moving averages, 24, I'm sorry, 28.54 to 31.50. We're pretty much trading between the bands of the 10 period moving average to the 21. So that's the low high. We can go to the following week. That was 2 weeks ago. We can look at this and we can see 31.33, 28.71, 28.93 was the average, 31.63 was the upside. So we basically stayed again in there. Now this week we see a very narrow range where we compared to the past several weeks, and looks to me that we're probably going to try to move back toward the into the grid, maybe coming back into that maybe 30, 31, something like that. Let's look at the daily. The daily is printing down 31.23 low, STX 31.59, so we're trading below the extreme projected for the day. PPMs though are still positive. That 10 period moving average 31.02, that's your major support. What was the low I said? 31.23. So we didn't quite get down to that level. It's just below where the grid is. But that's going to be your buy point. But a lot of these markets look like this on the dailies. They have a downsloping 21. The 40 is flat above the market, and the 10 period moving average is rising below the action. So this is all this is what a sideways range looks like. That's the configuration on the moving averages. So here's in phase energy. PPM's big time point or 2.91 upside. Basically working within the grid here. We had a low of 85.16. 80 STX was 84.93. R1 90.59. Actually R2. We went just above R2, 92.57, so pretty big range today. And a lot of these markets are spiking around for sure. So let's go to a weekly. Yeah, weekly is breaking out of its RTX. There are some upward objectives here, looking at $86.68. We've exceeded that objective. Next level 105. Don't know much about this company, but you know the patterns are getting acceleration on PPMs. It's a big time mover. I think you brought this up before. What are these? What segment and the energy are they in? What are they doing? Okay, let's go to next stocks. I said I don't know much about these stocks. I'm just okay. Solar, another solar. So what's going on with the solar, folks? What's going on with it? Two stocks that we brought up today are in these big squeezes. That's interesting. Yeah, so I'm not sure Momo what they're doing, but on a weekly basis, we're trying to make a turnaround on this thing, but we're still very negative. Lots of overhead resistance. Could be setting up a bottom in here from a PPM standpoint. Let's go over to daily real quick, just see if there's anything there. Yeah, daily looks interesting here. I wanna come up and just see if I can see if we have this in the database. Yeah, we do. Yeah, so we don't have a buy signal on this right now. There's not really, we sold it out when it collapsed, broke through this pattern here. So looking for a buy, but things are starting to turn. So we don't really have, we don't have a buy on here just yet. Not sure I can be very helpful on this one. It's kind of a no man's land. I'm not convinced enough that there's a good buy here or anything like that. It's trying to set up a low, that's for sure. Yeah, so here's another solar. This is a Canadian solar and daily. PPMs all look positive, plus 0.21. Major support 3270, call it 3290, just below, well below where we're trading. On the grid itself, we're just looking at a low 35, S3 3490. So S3 R1 is 3699. Basically an R1 S3 today on this, but overall this is a big uptrend. No current Fibonacci projections or anything there to point out, but this is definitely in a good uptrend. Let's go back to the yeah, trading at the top end of the weekly grid here. RXT 3434, high 3237. So we definitely, did that spike? Looks like it spiked above that number. RXT 3641. Yeah, high 3699. So we just went just above the RXT number, and but this is a screaming bullish pattern, just like all these solars. And I don't know if we have this in our database or not. Forgot the symbol. Yeah, we do have it. Okay. So a couple things on, we were long this thing down here at 15. We sold out, then it broke out again, so we got back long on a short-term basis. If we switch this and we go to an optimized intermediate model, then the intermediates kicked in here on the recovery around 22. And one of the things we can do on the platform is we can start to look at, some of the some of the aspects of the individual symbol itself and see what it's expected to do from a trade profile viewpoint. So anyway, let's go ahead and go back over here to TradeStation. Yeah, Borg's like, I see that comment on the flu. By the way, we need to ban cars because 1.2 million people die internationally with the die internationally by driving cars, and COVID just caught up with cars, so it's a problem for sure. Bear with me 1 second, folks. Yeah, I see some comments about the autonomous driving, and if AI could lower by 5 or 10% what humans are doing to each other driving, it's a good thing, right? And that's the whole point of AI. It's the whole point of even the platforms that you're seeing, looking at our trading models. If it's very difficult for you to outperform on a consistent basis the trading models, because they never get emotional, they never get tired. And when we were originally programming our models many years ago, as one of the guys I was working with, a buddy, he asked a buddy, he goes, wouldn't that take a lot of work? And his comment was, who cares? He goes, the computers don't care if they have to work a lot. They'll do whatever you tell them. So that's the beauty of computing power. But that's AI is definitely the future, and you're going to see a lot of things that are driven by this as well. Yeah, here's weekly Exxon. This thing just drifting. Crude oil is kind of in trouble. Maybe we can go Exxon to crude. I think we covered Apple a little bit ago. Sunworks. Weekly weird spike in prices here. Not sure what that is. Let's try to look at it daily and see if we can see anything at all. Wow. Yeah, these type of, I don't know what kind of liquidity we have here. A lot. 4.8 million. So I assume there was some kind of news a few days back. Yeah. Before I go on, I'm going to go backwards for a second here. Let's take a look at. I want to do a couple things here because this is distorting the charts. Yeah, so crude, like I said, is under a lot of pressure. And this is something that we had talked about. I haven't covered this for a while on the channel. But this is the little long, looking back a little ways, looking back to May. And this has everything to do, I believe, with the economy coming back, everything that's going on. Crude is stabilized. It's probably going to be the 33 to $43 range. We're going to switch over to a weekly here in a minute, but these things are just flatlined, and it's just whatever demand is out there is being pretty consistent. And this is, since I have the memory of an elephant, I guess. I remember talking about this 21 period moving average above it supplying a lot of resistance. Well, that number now, is 39.58. So that's going to be that $40 level, probably 33 to 43 level is going to be your range. If you just look at the grid right now, this is on a weekly, 36 to 41, as high as 43 is the upper part of the grid, but that 21 coming through there at 42, here we are on a weekly, 42 bucks. That's going to be the top end. So R2 is going to be about it. We're printing down at the extreme, so we're pretty close. I would be surprised if we go much lower, but that, as far as Exxon and some of these other companies go, this is the true recovery trade. So when crude starts to see the next level of demand, we should go back somewhere between $52 and $60 a barrel at that point in time. I don't know when that's going to happen. I did see that they're trying to burn some more fuel. The Boeing has got some tests going on the 737 MAX. Let's see, they finally have it. Well, that's yeah, you're probably right about the solar play on Biden. Man, yeah, that's a scary thought. Okay. Yeah, I guess if these folks get in and they attempt to do the Green New Deal, there's going to be some major flows until we go completely bankrupt. And they spend, what, $42 trillion or something. Yeah, it'd be interesting. Yeah, so as far as crude goes, that should be your setup. Okie doke. Let's move on. Just still working through this list. Yeah, so I brought up, let's go here. Let's take a look at the VIX. And this has been really interesting. It's actually upticking this time, which is interesting. Chris, that's hilarious. Okay, that's funny. Chris Rapp, thank you. But yeah, so as we look at the VIX, it was interesting that when we saw the volatility, we saw initial volatility. We've seen a couple of spikes where markets sold off and VIX actually went down while it was selling off. Really been interesting. But we have this upsloping 200-day moving average, which is the orange line here. This is somewhat of a demand line, so we could see the VIX move up around 29. I still just think on the markets in general, is that we are locked into this sideways range, that upward ABC, moving toward the that upward bound between basis the S&P 34 to 34.42-ish on the upside. The big number above that, I think a 0.76 retracement is 34.98 is basically 3,500. I don't think we see that. I really don't. I think we continue to grind out, especially as I set up month of October is just going to be the sideways choppy month. So, but gives a lot of opportunity because on these upper end of these market grids that we put out there, you're going to be able to trade the both sides of the weekly grids on a lot of these stocks. Yeah, I think, Chris Mayberry, I get that. I get that. I really do. I'm actually in the process of building a completely off-grid house, so I get it. So yeah, that happens. And it's just it's one thing to make an investment, and it's one thing to go too far with it. So an all in. But yeah, we'll see what happens. Okay. Yeah, I think the support, Javier, at 332 is good. On that would be the 3320. That's pretty solid. I don't see us getting above that. In fact, we're trying to uptick here a little bit. We're just hanging around, man. This market just flatlined this 3360 level. Yeah, it does save money, but it's very expensive yet to put solar in. No, we're working on a 9.6 kilowatt system, and it's not cheap. Better than it was, but it's not cheap. Yeah, Chris, I'll just make one more comment on that. Yeah, just know that fossil fuels aren't going anywhere soon. There's not a lot of sustainability, and I actually laugh at folks that own Teslas in areas that are coal-fired because you're not green at all. In Phoenix, a region here, we're nuclear powered, so we are actually probably one of the greenest places in the country. We're pure neutral. We're both from Hoover Dam to the nuclear power. We are 100% naturally powered here. So Phoenix Valley has been ahead of the world for so long, it's crazy as far as sustainability, for sure. So anyway, we got lots of sun. We got big solar farms out here too, but the big elements are nuclear and water powered as far as electricity goes here. So if you're plugging your Tesla in, you're pretty green in this area. There's a lot of areas it's basically a joke. You're still burning fuel. Anyway, yeah, until you can get, that's the other thing. So don't expect to see these things go along much at all. Anyway, let's let's go to something else here. We're about 30 minutes out to the close. Let's start to focus a little bit on what's going on here. I mean, this thing is like watching paint dry. Seriously. I mean, I want to do this live stream. This is a second market live stream I did this week because I thought there was going to be monster volatility and we could actually do some trades together. There's been nothing to do here. While I've been talking, I've been trying to keep an eye on another monitor just to see if there's anything going on that we might be able to set up a trade. There doesn't appear to be there's not enough volatility. The other day, if you were on the live stream the other day, I'm actually going to rip out a section of that. I did a live trade on the Nasdaq on Wednesday. That was a great learning experience. So I'm hoping to be able to cut that out. Who's going to win the World Series? I don't know. I don't watch baseball. Yeah, good point, Jake. Yeah, battery weighs 1,000 pounds in a Tesla, yet you have to move 500,000 pounds of material to make one. Yeah. Very good point. Yeah, it has been. Yeah, SPX. Let's flop over there real quick. I use INX on this system. Same thing. Yeah, here we are at 64. This is the number that I want to watch coming into the close today. Is this 64 number? Yeah, Super Bowl probably KC again, right? I mean, that's insane. Anyway, yeah, I agree with Ryan. I agree with the 0 to 60 seconds in 3 seconds for 45K. That is a pretty good deal. Problem is Teslas are junk inside. I don't know if you've been in them. They're really cheap. They're all plastic. So I don't know. For 45, give me a little bit of rosewood. Give me something. Because I'm spoiled. BMW spoiled. But yeah, so let's yeah, as we look here, we're just hanging right around the 64 level. I think we're going to see a little bit of a surge on the close here. Let's dig into this and let's go into some 5-minute graphs here. Let's just set up the close since we got like 25 minutes to go. Yeah, I'll go into Zoom here in a minute. I'll do that. Yeah, that's probably right, Phil. Seahawks, Chiefs in the Super Bowl. Yeah, I'll go with that. Made in China. There you go. Thank you, Christoph. Absolutely. Yeah, you have to give Elon Musk one thing, right? The guy is, he's like the Edison of our time. He's incredibly smart, and he's a lot better salesman than people think he is. That guy's a genius on just about every level. Yeah, I see somebody mentioning Kathy Wood. I want to meet her actually. I think I would like to have opportunity to talk to Kathy. Yeah, like I said, it depends where you live. Like, yeah, she's probably right about that. I think she's pretty brilliant, and from what I've seen from her so far. But in the end, you're still going to see a lot of things, and maybe I know Nicola is pretty much looking more and more like a scam by the day. They've never produced anything, and everything CGI that they do on their simulations. But hydrogen is also a player potentially down the road. So there's definitely something big there too. So don't leave out the hydrogen folks. They could be the real competition for a Tesla for sure. Especially since you got to plug the thing into a wall. If you can get a different type of fuel, hydrogen would be magical in my opinion. I think that's probably got more upside, but that's just me. There's no real player in that space yet, so it's a long ways. Probably if Elon would have liked hydrogen, there'd be hydrogen cars already. Okay, yeah, so we're looking at 5-minute S&P here. Looking like we want to challenge the 200 average here. PPMs are starting to try to click up. We're trying to challenge some of these numbers, 64.70. But we've just been bumping up against this ceiling for a while. But I have a sense that maybe folks aren't going to want to go in short on the weekend. We're going to see this thing ramp up a little bit here. I'm going to flop back and forth between two charts here. I just want to watch some of the level 2 action. Just want to change the color here. That'll be a little easier to see, I think, at that level. Yeah, so we're just working this range. Just stuck. We get right up at the top end of the range and we fail back. Like I said, I'm going to flop back and forth here between these charts. I'm also going to go back to my favorite bar chart here. Yeah, just locked, man. While nothing's going on, let's go back. Let's go back to individual stock. Let's do Zoom. I was talking to a techie person the other day. This is a 5-minute Zoom. Let me just get to a better chart here. Is that the technologies that are in Zoom are so easy to copy. The only thing Zoom has right now is an easy kind of GUI interface to use. But there's some kids out there, I heard, techie kids that are actually putting together these components from Linux kernels. We're a Linux-based company. We run everything on open source. And you can take some of these Linux kernels and actually do your own Zoom platform, and you just have to have that same URL. So what Zoom has done is they've made it easy to put some of these pieces together, but it's actually, my comment to the guy I was talking to, so like, should we be shorting Zoom? For the moment, probably not, but it's kind of interesting thought is that they don't really have any special technology. There's nothing that they're doing that they've invented or done anything that's like really, really unique. They're just the platform. So, and we know there's been stuff, there's all kinds of other stuff. GoToMeeting, you can go down the list of all the different things that are out there in that space. But it's interesting that this thing may just be pretty well played out, but as in a lot of these symbols, and especially we'll call them the COVID trade, is that this trade is topping out. I saw a comment on the chat line a little bit ago that somebody was talking about, second shutdowns coming, maybe. The question, will all of us comply next time around? I don't know. There's a lot of, there's groups, little subgroups forming that aren't acting like they want to, that they want to actually comply to any lockdowns going forward. So it'll be interesting to see how that happens. Yeah, I actually saw a really cool video. I see Jake was talking about this fusion powered F-22. I saw a video the other day on this fusion power, which is insane. If you look that up, I don't know, I wish I would have kept the video link or something. That would have been interesting maybe to put on the Facebook channel or something. But yeah, there's some very interesting technologies going forward. It's not just going to be electric. There is going to be other things that are going to drive vehicles. I don't think there'll be a fusion jet powered car, but there's some very interesting things out there, especially in the aviation area and things of that sort. I know our friend Elon has actually got his eyes set on trying to figure out how to build an electric airplane. And there's a lot of things that are interesting about airplanes, and they're not just aerodynamics, but how much fuel they use when they get to certain levels. There's a certain efficiency level, and the electric airplanes could actually fly higher, fly much more efficient, and not have to have that balance between the oxygen intake to the fuel. And we'll get too technical, but it was an interesting whole concept here. So there's, man, the future. In some ways, I wish I was 20 years younger. I'd like to see some of this. So hopefully I stay around long enough to see some of these technologies, because there's some way cool stuff coming out. All you younger guys are really lucky. I just hope we can figure out all this social mess that we have going on, and that you guys can sort that out, because that's going to be on you for sure. So it'll have to get sorted out. So let's see here. ES, what we got? Timing, 15 minutes to go. Back to 48 on the futures. We go back. Boy, that white chart doesn't look good anymore to me now. Let's go back. Yeah, we're 59, so we printed up to 65 again. I don't know if we're going to get to 64 trade or not. We got 15 minutes to go. Let's flip this thing to a 15-minute, just see what that looks like. Yeah, I have to agree. We did lay the foundation. I'll make a comment, and for my fellow baby boomer, I would just say that the baby boomers are probably the worst generation ever. We did some good things, we did a lot of bad things. So unfortunately, right now, if you look at the everybody, for the most part, everybody in government, the senior government players are all baby boomers. That tells you all you need to know right there, right? So pretty much got everything screwed up. Yeah, I agree with the dark mode. Yeah, but you know, I just think about, yeah, we did lay a path. Hey, classic rock. What can I say? We did a lot of good things. Computers, Bill Gates. We got, even Stephen Jobs. So let's, yeah, so we're 58 now. I don't know if we're going to get that little surge or not, but we'll see what's set up. Let's go over to the level 2. Yeah, Chris, I agree with you, man. Future is going to be amazing. AI, I'm trying to put a project together right now that I want to be part of that AI future. I think there's some really interesting things that are, especially in investing and automation and some other things that are really going to be amazing. Yeah, so we're selling off a little bit here. 45, 45, 75, 46 on the S&P. But this is toward the lower end of this range we've been locked in. I guess we got down a couple times down to 44. So we're at 46. Grid is kind of contracting. So we'll start to see some sort of formation here. We can get the grid to turn back up. And this is a 1 minute graph we're watching right now. So as we're watching this stuff, this is likely to keep this thing going. Yeah, you're right. AC/DC does sound good, but those that have seen me on these live streams before, I am like a serious industrial metalhead, like German industrial metalhead. So that's usually what I do to get things going for me before these shows start. I wish we could play the music, but there's all kinds of content problems and things like that. But anyway, that's fun. Yeah, I agree, Christoph. I really do. I know it's, especially, my dad was a World War II guy, right? So that's who raised me. He was a um, hardcore guy, you know, good dad, didn't take a lot of shit. You know how that is. Yes, dude, my ears as well. Um, I have really bad tinnitus. Those of you who watch my videos see my guitars on the back wall. We used to play very loud music back in my younger days, and I love my headsets. I'm a headset freak, so I'm always blowing my brains out, I guess. Yeah, I hope they don't try to shut us down again. I'm not sure what's going to happen. So we're continuing to hold 45. We're trading 48. We got 10, 11 minutes to go here, folks. uh, we still don't, Jake, we still don't have a good, solid data source for cryptos. Yeah, I wish he was still alive. He's been gone a very long time, but thank you for that, Chris. Um, yeah, so here we are back to selling 44s. We're printing down at the low end of the range. So we'll see if anyone wants to hold this thing. As you know, those of you that have been on live streams with me before, that last 2 minutes of trade before the close and 2 minutes after tell you so much about what's going on and give you experience, basically an insight to everything that happened on the session and the squaring up of trades. And we'll see if there's any liquidation orders coming in here. We're trading 42, so this is down. Let me see what this low is over here. Oh, we did print 41, so we're down at the lower end of the range here. PPM1 is negative 0.25, so it's in a little minor downtrend here. So it's interesting to see how this is going to set up as far as this goes. So make sure you guys smash the like button that hung out today. If you haven't subscribed, subscribe. We do videos every day, 5 days a week. And usually 2 live streams, one on training for our software platforms and one live on Wednesday. This week is 2. A few weeks ago when markets were crazy, we did 4 live streams and 5 videos. And you know, I have a lot of clients that depend on my analysis every day, so I'm very consistent. You get a video every night. And I've been doing daily commentary since 1984. So it's part of my DNA. I don't, even when I'm on vacation, that's what I haven't figured out. So when we travel again, when I go to travel, I've always continued to write my commentary. I don't know what would happen to this channel if I didn't show up every day. We'll have to see. Yeah, the S&P numbers to watch on the close today is 64. Let me flop over there. This is, they're 55 now, so we did sell off a little bit. Looked like we were going to try to surge, but we hit that wall, 64, 65 on the upside, 55. The key number on the downside is way below us, which is 37. So 33, 37 is the key number on the downside. We're going to stay above that. So we're going to be in no man's land as we come into the close today. And just as I talked about from the standpoint of the our models and output, this is a Friday, so we run all of our intermediate models. Not only is it a Friday, it's actually the beginning, the first week of the new month, so we're going to have monthly orders coming out as well. So the secular trades, there's going to be the intermediate trades. This is a really big day in the month of as far as October goes. And you know, so we traded down to 42ish, and now we're back 44. We've got 6 minutes to go. So you know, maybe we trade back to 46, 48 again, and this thing just goes sideways for hours. No one seems to want to make any big bets. And we're looking for, in the next 2 minutes, let's see, yeah, next 4 minutes from now, we want to look and see if there's any liquidation. So I talked about this on Wednesday as well. When you hear institutional buying or selling or those type of things, I keep trying to remind you folks that those are really, especially on the close, those are institutional orders, are rebalancing orders for ETFs, mutual funds, those type of things. Not necessarily smart money. They're just rebalancing. They have orders coming in to these ETFs. They can see all what kind of liquidity, what they need to do to stay in balance, and they're pretty close to being in balance. There's a lot of real-time processes out there now that you can actually, I mean, this stuff is automated, so there's no humans making markets or anything anymore like there was when I started in the markets. This is all algorithm driven, based on inventory and a lot of other things. Here we are printing 41s again. So we're trying to drift down, getting pretty critical here. Still about 5 minutes to go, so we'll continue to hang out. Yeah, Stephen, you're welcome, man. It's good. Russell rallying big, huh? Let's take a look at that. Man, I can't handle those white charts now when I click on that. In fact, I just got rid of it so I don't click on it again. Yeah, so we're still selling off 40, 41. So this is printing down at the lower end that we've been. 4 minutes to go. Let's go see if I can get a hold of that Russell. Yeah, Russell up 0.72. Yeah, so since around this, I'm on Pacific time, so if you see these times down at the bottom, you wonder what that is. We're Pacific time, and I hate it because soon you folks are going to switch your clocks and we don't. So I'll be living in mountain time. So I have to get used to the markets closing at 2 o'clock again. Really messes up my day. I used to say I didn't want to be on Pacific time in the markets again. It actually works out pretty good. Okay, so yeah, Russell up 0.72, backed up a little bit in the last few minutes. But let's go over and watch this final minute or two. So we're trading down to 40. We got 2.5 minutes to go. So we're going to stay focused on level 2 here. I'm going to go full screen so we can all see it real good. Yeah, still holding around 40, 41. We're just about to click into that 2-minute period. Yep, here we go. We're into the final 2 minutes. Now what we look for here is how the market's going to trade in that last 2 minutes. Volume in the final minute will pick up. If you look at the level 2 on the left-hand side, you can see there's about 100 aside trading right now. That should go to 200, maybe 300 in the final minute. Here we are, 41's print. Not much here, folks. Not so far anyway. We have rolled over. This is a final minute of trading. Yeah, I'm just glad on my German metal I don't understand what they're saying because most of this stuff's really bad stuff. But it sounds really cool in German. Yeah, and I'm looking forward to the final a bottle of wine tonight. I was eyeing it, some Pinot tonight. Here we are, 37. So we're definitely get some selling in the final minute. You can see the volume picking up, and so here we go. That was the close right there. So we had some selling. We traded down to 37. Now we'll see if there's any kind of short covering or anything. This will tell us about the squaring of trades after the fact. Back to 41. Looks like it's going to be reasonably stable, but what we'll see in that first 2 minutes is actually start to see this thing uptick a bit, and you might see some short covering, but looks like steady liquidation from about 45, from the 45 handle down to 37 as we came in. You see the downslope on a 1 minute graph. So definitely some selling. Let's take a quick look at the cash here. Yeah, so cash ended up going out at 48, so we're above that 37 level. A pretty sloppy close. Would have liked to have seen it close over 64, but it wasn't important. We're just in this sideways range. So there are some things that I'm eyeballing coming into Sunday night's video. So hopefully we'll be able to get have an efficient release of the video. I try to do a premiere video a lot of times on Sunday night to kick off the week, and I'll come in and chat with you folks while we're all watching a video and stuff. So Yeah, which screen you talking about, Gino? Yeah, I almost should play that video that from that guy. Yeah, so do you folks, I'm just curious, I'm going to ask the question as we close down for this session. You actually think that Pelosi will come to the table and do a stimulus deal now? Does she think Trump's going to die so she can do it because Biden's going to take over? What do you think? Hey, yeah, send me. I'd love to hear some Hungarian metal. Info at Kendall Report. Send me some names. Info at kendallreport.com. Okay, so there will be a deal. No, she won't. No stimulus deal. Yeah, that's what I've been saying as you folks been watching my videos on what you've been watching my videos on the channel. You know, I've been saying these guys, this is all posturing. It's like they want to make it look like they're doing something. It's what, a month away from the election, basically. They're not going to do anything. I'm in the camp. I don't think they'll do anything, but they'll talk. They'll talk. Yeah, so summarize, do you think we're still bullish even if no stimulus? I think we're sideways. That's what I was trying to set up. I think we're ABC up, then I think we're back down and we test the lows. We go back maybe that 32.30. We probably have a 32.30, 34.40 range through this month. That if you had to hold me down to that, and it's going to feel somewhat random from that standpoint. Is going to feel like, we're going to get up to we got up to basically 3,400. We backed off. We traded all the way overnight on the futures. We traded down to 3,300, and it's just going to get very random in here as far as the patterns go. That's really my expectation. I don't think we'll be bullish or bearish, but it will feel both during the next month. It'll feel like we're bullish and bearish as we go through this upward ABC. So I'm, like I said, probably a little disappointed that there's not some things going on, but Terry, you're right. If it's in her best interest, yeah, probably not. So I would think not. I still think it'd be fun if there was a way for us all to actually, instead of text chatting, to be able to talk at a reasonable level. That would be fun to have conversations, open conversations. I guess I did that one live stream where I just gave everybody a link to a Zoom meeting that you could sign into. I guess that could happen. That would be actually interesting, I think. Yeah, airline bailout. Yeah, it's interesting. Let's go there real quick. I think I have the right account up here. Yeah. Those of you who watch the channel, I haven't brought this up for a while, but my airlines Buffett strategy, there's only one stock long right now, and that is the only open. This is a short-term strategy. American Airlines down little less than 1%, just down a little bit here. That's the only trade we have on. It'd be interesting to see if some of these start to come back on again. If you look at the equity curve here, you see we were actually at the peak up here. We're up 99%. It's up 84. So the last buying came, we got some decent rally. And as it got up, this was where the hand is right now on the chart on that equity graph, was where the that was right at the top of the S&P. That was 9.2, 9.4, maybe as late as 9.8 on an equity curve. And we dumped out of a lot of those stocks. So we managed to eke out a few bucks off of the equity curve. We're basically neutral right now, 82% cash on the airline portfolio. And that's a beauty here, folks. I know we still have like 750 people watching, but you can sign up for you can sign up for this software. It's $3.12 a day. You can just go here. You can sign up for it. There's a video there explaining what you get, and we now have added onto the service. We now actually have a different. We actually added the market grid, and like I said, right now there's 62 symbols. After this weekend, probably between 120 and 150 symbols. I've got to test a couple things and make sure everything's working right. But that's on our portfolioexpert.com website. So, but you could build a strategy with your stocks. In this case, we call it. If you watch the channel or you go back and look at the videos back in May, whenever it was that Buffett dumped all the airline stocks, we put those stocks into our portfolio manager, let our short-term signals go. This, like I said, this thing's up 84% just from basically May. I think it was May 20th or so when trades started to come on. You can actually see that. You can see the trade log. And we go down here. Yeah, it was May 420, 511, 514, and then there was another tranche that came in on the 20th. So you can see every transaction that made this 84%, including the recent round. Here we are, 923 is when a lot of the airlines rolled over, and we went to cash. So this stuff is, but you can definitely go in there, sign up, and get access. It's a monthly, there's no obligation or anything, just a month-to-month subscription base, and you get the WaveTech, and you get the market grid as well. So that's certainly something that you can do there. Yeah. Yeah, I don't know if I keep saying it's the same pattern. It's unfair. I guess I don't understand that comment, but yeah, Gino, it's pretty funny. Those of you on the, like I told you, if you want to join our Facebook group, it's Facebook/groups, plural, /The Kendall Report. And you get approved, but you get approved pretty quick. We keep close eyeball on all that stuff. And, we can talk about stuff we talk about on the channel and other things that are on everybody's mind. I do post some of the market grid up there right now. Yeah, Elliott and Fibs is good. My hope is, I don't have it with me, but I have a 38,000 word transcript on the WaveTech system. So Christoph, I'd rather you learn WaveTech than Elliott, but you have to know Elliott to know WaveTech. But WaveTech is a combination of moving averages, Elliott wave, and understanding the PPMs. And that is a way to really understand these movements. Because one of the things that is interesting, the PPMs and the moving averages, especially in doing Elliott wave, will really help you keep out of trouble of coming up with some crazy counts. I'll just say most of the Elliott wave analysis I've seen online is completely wrong. It doesn't even match theory. I'm an old school theory guy, and there's just so much stuff out there. The way people count 5-way, it's terrible. Most of the stuff that you see out there is terrible. Was it Game of Thrones or something? Oh man, needs to go back to theory class on that one. There's a lot of bad stuff. Analysis overall, I've watched a couple of the videos because I get, as a creator, I get to see what you folks are watching on top of that. And I'm not saying analysis, it's just the theory is just really bad, really bad. Lot of bad theory on there. Yeah, and I understand that too. A lot of folks are engineer-like, and I think that that's important. And you know, we're kicking around. We're trying to figure out how to do a lot of things with this, trying to get this book finished, trying to maybe do some of these master classes. I know a lot of people do that, but we've got, you know, we're a little bit, this is a little bit different channel than you see other places, because we're not just going master classes. We actually have software, and we actually manage real money. We do a lot of those things with stuff. We don't we work with money managers. And in fact, I'll make an announcement. I don't know if it's open to the public. I don't think it will be initially, but I am speaking at a fairly large symposium here next, and I think in 3 weeks. I'm going to be talking a lot about portfolio theory, dynamics, multi variant investing, those type of things that are pretty much impossible to do without a platform that has the abilities to be able to actually do those type of things. You and I, as a human, can't really do those things. You know, we can't follow 16,000 symbols. We can't even take like this first bridge portfolio that I was showing you earlier, and you look at this thing, and you know, you're up 65% this year, trading basically 9 stocks, but you're trading them on short, intermediate, and long term. You're rotating those out. So one of the things that the platform does let you do is actually lets you to build your own personal mutual funds or even ETF. And most trades, most places where you can go to trade, especially as a retail player, some of our institutional folks are associated with some of those places are still charging ticket costs to advisors. It's really interesting, and there's a big chunk of cash, literally trillions of dollars in there, that they're still charging fees from. And I just think it's embarrassing for those. I know Schwab and TD have went to zero cost, but Fidelity's still doing it, and shame on them. Anyway, they don't charge the retail guys, but they're really abusing the professional community. But that's for another time. But anyway, yeah. So I appreciate everything. We still got 600 folks, so I'm just kind of babbling on. I appreciate everybody that's going on. Am I bearish for Monday? I don't think so, Tamara. I would say the best thing to do is watch that Sunday night video. I put the videos out every night before the open of the U.S. They typically get out. I would like to get them out about a half hour before the London Open every night. I've always done my analysis at that night. I keep telling myself I would like to change that habit. It's just I've been doing it for 15 years that way. I stay up late at night and watch London Open. Like I said, I'm not looking forward to the time change that's coming up. I know we're still about a month out, I think, but it's still, I'd start thinking about it because it's going to move my clock. I'm going to stay put. All you folks are going to move your clocks, which is really going to mess me up. So I'm going to be on Mountain Time instead of Pacific Time. And it just really, it's one thing to change your clock. It's another thing to change the hour that you actually do things. So definitely a rhythm breaker. So yeah, let's see here. Yeah, who's the troll that you guys are calling out? Anyway, yeah, it's very interesting. You know, I think our channel's over 23,000 organically grown, and it's interesting hanging out with a lot of you folks. I see a lot of common names and stuff that I'm used to seeing here. Uh, thanks, Mr. Tater. I don't know what's going on. I see some comments here, but you know, yeah, I don't know about that, Christoph. Is that something new? I haven't heard that. You know, I've actually on this channel not realized that, like, you know, there's a holiday coming up on the following Monday, and I don't even know the market's closed. I'm so everything just keeps going. Sometimes I get so focused on just in the rhythm of what I do every day. You know, my evenings, I actually leave the office at 3 in the afternoon, come back at around 6:37, and I work from 7 to 1:30 every night, and that's my typical time. And I usually try to get in the office back before 9:30, even though I'm up maybe watching markets from home earlier some days. So anyways, yeah, it's kind of interesting. Yeah, I will let you guys know. I've got to talk to them. I just got invited last week. They just gave me a time to speak, so I'm waiting to find out. It is a money manager meeting, active money manager group. So it'll be interesting, but I think they plan on broadcasting it, and I don't know. I know they're charging to get in the door initially, and I don't know what they're going to do with the videos. I had to agree to allow them to share the information, so I'm not sure what's going on there and what I'll be able to do. Yeah, you know, I don't worry about the trolls. You guys have to understand something. I stand on a trading pit with a whole bunch of guys, and there are always trolls around. They've existed forever. The internet makes it easier. I love a line that Mike Tyson said one day, is that he made a comment that the things about trolls on the internet, and not that I'm not Mike Tyson, but obviously, right? But Tyson said the thing about trolls on the internet, they say the shit they say because they know they won't get punched in the face for saying it. So it's kind of interesting. And coming from Mike Tyson, that actually means something. Not much for me. So yeah, hey, thanks, Anil. I appreciate that. Yeah, I'm just reading some of the chat here. Just kind of closing down. We've been hanging out for a long time. Yeah, you know what? You're right, Matt. You know, you guys all probably most of you at some stage, especially a couple years ago, it was really true. Is Ty Lopez is an interesting guy. When he had the Ferrari in the garage with the bookcase in the garage, which I thought was an interesting setup. You may remember that, but he was one of the most watched people on the internet. And he made a comment one day. I participated in some of his live streams he did many years ago, probably 2016. And he made a comment. He goes, "Without the trolls, you can't win." So the trolls just make you stronger. It's like, yeah, it's like, yeah, that's the way it works. Yeah, I wonder, when is that fight with Tyson? I'm anxious for that. My son Jay's on here. We watched a lot of Tyson fights, paid a lot of pay per view to watch 22 seconds of a fight, but it was always fun. It was the popcorn and alcohol that made it fun, I think. Thanks for the super chat. Appreciate it. Oh, sure. So, hey, he paid for this, right? Okay, here's the crystal ball. So, anyway, the infamous crystal ball. It's pretty funny. It's like I put it in the videos every night. When I take it out, everybody's commenting on it. And I did a tweet last night that said, "Hey, markets are getting pretty crazy. I have to depend on, and I put an arrow, down arrow to the crystal ball. So it's kind of fun. I appreciate it. Yep. All right, guys. Yeah. November 28th. Okay. Man, we got to wait that long, huh? That's a ways off. That's funny, man. Yeah. And my wife actually bought that for me. And she bought it because people just say, does Bob have a crystal ball? So she bought me a crystal ball. So that's pretty cool. I've had that thing for quite a few years, probably 10, 12 years. It usually just sits, I have a study, what I call a study area here in my office. And I had it sitting over there. And one night I decided to bring it out. So it's been fun since then. Yeah. I will give you a call, Stu. Any time particular? That's funny. Jake's pretty funny. He told me I was the best guy at never being wrong that he's ever met. I appreciate that comment. Yeah, man, it's true. You know, listen, I'm committed to our business that we run, and folks have been around me for a long time have wondered when I sleep. And last night, not a lot, but it's okay. Remember, I've got somebody, I think, I know I saw somebody, it might have been Gino, bought some of this, the Runa. It's actually a green can, but I'm on a green screen, so it turns. But this is the Berry Boost, and this stuff is amazing. 150 grams of caffeine. I got through this whole 3 hours. What we got? 3 hours and 1 minute, one can. So not bad. Good fuel. Well, listen, folks, have a good weekend. It was great hanging out with you, and I've got some other things I've got to do yet today. But I'm thinking about that bottle of wine real hard right now. So thanks again, everyone. Have a great weekend. We'll talk to you on Sunday night. Hey, Joseph, I see your comment on the keto channel. Let me see if I let me see if I can find those folks real quick, and I'll bear with me. I know you asked about that on the other day. That's good. We picked up quite a few subscribers on that live stream. Thank you. What's going on, guys? It's the new. Okay. The the channel on that keto channel is the Keto Connect. Yeah, I've actually used a lot of their recipes. The husband and wife team, they got 916,000 subscribers, so they're pretty legit. And actually, if you folks are watching, I'd love to connect with you, by the way. No pun intended. Okay. Yeah, matter of fact, we still have 400 people on here, but yeah, they've actually, I'm putting it on screen for you. They've actually got some pretty good recipes, and yeah, they do a good job. I've actually used a bunch of their stuff. So anyway, there it is. So free commercial for the Keto Connect folks. So if you subscribe, tell them you found out from the Kendall Report. Appreciate it. I actually don't know them, but I have used their channel. I mean, there's actually a recipe there how to make a cauliflower hummus that tastes just like the real thing. They're pretty good. Anyway, so if you're doing keto, that's a great place to go. That's funny, Gino. All right, guys. Have a great weekend.